So, Charlie, sauce.
On sausage. Okay, let's continue. Tugende ku outflows. Badde nkyateekako wano pisi mu muliro emaliriza. So outflows eyiwa gy'olabawo awo.
An old vehicle is expected to be disposed of for 10 million.
Twagimaze dda.
Sorry. Drawings.
Yes, drawings of cash per month. So twandike wano drawings of cash. Drawings of cash per month. Ziri sente mmeka? 6 million. Goods is 8 million. So
6 million.
Goods tetugenda ziteekamu, tateekamu cash yekka.
Goods ziri excluded.
Because this is a cash flow statement. Kikwatagana n'ebintu mabanja. We put statement is supposed to be money received and money spent. So we have drawings. Wait there, then let's look for another one. We have
projected weekly expenses.
Workers' wages 2.1 million, advertisement 600,000. Wages. It is weekly.
Tukwata Saturday tuzitayimuzinga by 7.
By 4.
Picture.
Mwezi. So by 4. So this is going to be 8.4. $8,500,000, $8,500,000. Then advertisement. 600,000 per week. It is 6 times 4. 2,500,000 per month. 2,500,000. So wait, the business loan, that's the payment of the loan. The loan is 6 million. Is going to be 2 monthly installments in the following months. Loan bagijjayo mu first month. Bagenda gizzaayo.
It is payable in 2 monthly installments.
In the following months. Bagijjayo mu October.
Well, interest is paid based on diminishing.
Diminishing is reducing balance. I'm going to show you how we do it. So, we are going to divide this loan by 2. So we shall first say loan repayment. Loan repayment. When you divide 6 million by 2, you get 3 million. So it's supposed to be paid in the following months. That is November and December. So it's 3 million. 3 million. So those stated again good. Then tugende ku interest. Interest bagambye diminishing balance. Interest is 5%. So let's calculate loan interest down here. Loan interest is 5%. Diminishing balance method is that the loan is going to be reduced. The interest is going to be reducing as the loan reduces. For example, for the first month, which is November, our interest is going to be 5/100 times the loan principal, which is 6 million, and we shall get which is 300,000. So kitegeeza interest wa November is 300,000. Kati we tugenda mu December, since bagambye reducing balance, nga tubadde tebagambye reducing balance, neza December zandibadde 300,000. So since bagambye diminishing balance, tezigenda beera zezimu. So wano for December kyetugenda okukola is going to be 5/100 times omuntu ono yasiga tusinziira ku balance aba asigaddewo nti this person borrowed 6 million, sorry, the business borrowed 6 million, it paid back 3 million in November. Kitegeeza baba basigadde bagibanja mmeka? Oli? Yes, the business borrowed 6 million. The business borrowed 6 million in in October. Then it started paying in November. Nesasulako 3 million mu November, nemalayo 3 million mu December. So bagamba reducing balance. Kitegeeza we tuba tukajutinga interest ow'omwezi oguddako gwa December, tetugenda kukozesa neera 6 million nga we tukozesezza wano.
Tuba tugenda kukozesa 3 million.
3 million. Kuba ye balance aba asigaddewo. So we shall now have $150,000. So interest here will be 150,000. Then we go to the next cash outflow. Office furniture, 12 million. That is in the last month. Office furniture is 1.2 in the last month. So kweyo Roman numero tuyinawo furniture nga yo bagigula naye ne basasula n'omusolo. So bya mirundi ebiri. So we are going to have office furniture. In the last month, 2.2 million. Then we shall have the VAT. VAT is 18%. So 18, VAT is a tax, so tax in your outflow is 1.2 million. $116,000 is the VAT. Then let's look at another outflow. Cash purchases, 18 million per month. So we'll have our cash purchases. Million per month. Wangi.
Badde manyi n'emyutinze n'embeera nga like tompulira.
Ankubulira. So tuli ku cash purchases, kansuubira ogoberera bye tukola. Then credit purchases. zirina kuba 10 million, but this is to reduce by a quarter. The business paid in 3 weeks, less a discount of 7%. This is a business yasasula mwogo omwezi gwennyini, as I explained to you. Within 3 weeks, aba akyali mwogo omwezi. So we shall call it payment. Every time the business borrows goods and it pays back later, we call it payment creditors. Business nga yo weyewola n'esasula oluvannyuma, sente zaba zebeekasuddeyo tuziyita payment creditors. Then, when it lends out goods to people and it is paid, we call it receipts from debtors. So here, it borrowed goods worth 10 million, then it paid back within 3 weeks. It is like paid back within that very month, less a discount of 7%. So we shall come and calculate our 7% here. In creditors is going to be 10 million. So you get 7%, you subtract it from 100%, osigazawo 93%. Then times enkola sente ze baasasula nga babatemeddeko 10 million equals to 9,300,000. Kutegeeza buli mwezi business yasasulangayo 9,300,000 ng'emaze okwewola ebintu. Baba yeewola bya 10 million ne bagitemerako, eba ezzaayo 9,300,000. Then I think that's all. Ziweddeyo. It's done. The outflows are also done. The inflows are done. Because kyetubadde twerabidde mu outflows, sales commission yeno. Sales commission. So sales commission is also an outflow. Sales commission, but per month. The sales are 25 million. Commission is 5% per month. So let's calculate it down here. Sales commission equals to 5 divided by 100 times 25 million. Is 1,250,000. So the sales commission is 1,250,000 per month. So that's it. So we are going to also write here total cash outflows, and then we shall have our net cash position. So let's begin adding up the inflows. So inflow for the first month, that is October, is going to be negative 30,000.
We have 30,000.
30
million.
Sorry, 30 million.
25 million.
4.5 million plus 6 million.
6 million plus 12.
Plus 12 million. Remember the 30 is a negative, so eba yetoolako ku zino and we remain with 17,500,000. Then total outflows for the first month is going to be 6 million.
6 million.
Plus 8,400,000. Plus 2,400,000. Plus 18 million. Plus 9,300,000. Plus 1,250,000. 45 weeks. So wano olaba inflows zaffe ntono ku outflows, so tugenda kufuna negative net cash position. So let's now subtract the inflows 17,500,000 minus 45
minus
to
50.
50,000. So we shall get in brackets 27,50,000. So this net cash position, we take it to the next month. 27,80,000 Then again, you also add it to get the inflows for November. So that is 25 plus 5, 175,000 plus 9 million.
Plus 14.
760,000
Plus the 6 million. Eh.
is the outflow. So here we shall get 26,085,000. Then the outflows is 6 million.
Yeah, 6 million.
Plus 8,400,000.
800,000.
400,000.
Plus the 2,400,000.
Plus 300,000. Plus 18 million.
300,000.
Plus 9,300,000. Plus 12,500,000. So 1,250,000. We get 46,650,000. So when we subtract, we shall get negative 22 is our net cash position. 22,500,000. So then we bring this as our opening balance. Here our balance goes forward here. Then we also do the same. We add the inflows for December. 5 million.
25 million.
5,951,000. 14,760,000. So here our total is 23,146,000. Yes. Then the outflows. Outflows is 6 million plus 8,400,000. 2,400,000. 3,150,000.
50,000.
1,200,000. 216,000. 18 million.
18 million.
9,300,000.
9,300,000.
250,000. So we get 49,916,000. So when we subtract 23 we shall also get a negative 26,970,000. So when you look at our cash flow statement is now complete. When you look at it, you can see that the net cash positions is on a zona biri negative. So as we are commenting for each month, we shall say, for example, there was, if it is a negative, you use the word deficit. If it is a positive, you need to use the word surplus.
Surplus.
Yes, so comments. October,
It was a deficit. It was a deficit of
there was
a deficit
of
of 27,850,000.
then
November.
for November, I'm going to change, don't mind. So this is November. December. I'm going to just bring figures here. So our comments are done. Those are comments for each month. And our cash flow statement is also finally done. Then part C, advise the business on the measures to undertake to manage business cash. So how can the business manage its cash?
To avoid like okubeera nga beewola nnyo,
Avoid so much
like
debts.
beewala okuwolawoola.
Avoid giving out debts to untrustworthy customers. Okuwola abantu ebintu ennyo.
I have a question, yeah? Waliwo no question gy'oteesetinga ng'egamba shortcuts
cash shortfalls.
like kati njagala kimanya what does it mean? Kuba like the answers I give you beera ndaba nga wemba comparison ezemba nkuwadde n'eziri mu kitabo they look similar.
How to manage cash shortfalls? Nga baagala ways of managing cash shortfalls. For example, if you want to manage, how can you manage a business that is making losses? Osobola okukola otya okugirevivinga esobola okuddamu okwaka? For example, taking up a loan, reducing on expenses, reducing on production costs, laying off some workers. You are simply reducing on the cash shortfalls. Selling off some assets that are not being used. Avoid giving too many debts. Avoid.
To avoid all this talk, like nga talina like kugira bintu bingi nnyo stock nebeera nga egenda round.
Avoid overstocking.
Ekibye nga lumu wembikuwa obisala.
Ogambye avoid all the stock. But it is supposed to be avoid overstocking. Ogula ebintu ebingi ennyo ebiyinza okulema okutunda, so avoid overstocking. Nayo kisobola okukola. Waliwo ekibuuzo ekirala?
Sirina kirala.
So That is the example. Ngenda kuwaayo ka activity. Ndowooza ngenda kakuteera ku WhatsApp okakolemu.
Kale.
Then after you send to me the solution, ojja just kuba kifaananyi ompeere eyo ndabe.
Kale.
Ndowooza tukomewo tukoma awo.
Thank you, teacher.
Okay, nice time.
Same to you.